Every once in a while, a story comes along in the current event, the public sphere, that just straight up demands content be created on this YouTube channel. And this is that video. We are going to look at two very simple and very important lessons that we must learn from the Miami condo collapse situation. It's lessons that you can deploy immediately in your business, your real estate portfolio, or if you're an insurance broker, risk management professional like me, you really need to be adding these to your talking points for everyone that you talk to. So we're going to get into that, those two lessons right after this bumper. So if for some reason you're not familiar with the story of what we're talking about here, back last month, there was a condo collapse, a high-rise condo in Miami, where about 30% of the building just collapsed without specific warning in the overnight hours, and just a really terrible situation. At least 24, 25 people are confirmed as dead, and a lot more are still missing and presumed dead. And it is just an absolutely tragic situation. We're going to be looking at the lessons that we need to be learning from that catastrophe and what we can do to make sure that similar things don't happen for us. Now, if you're a real estate investor watching this, you're going to be looking at it from the client perspective. But if you are an insurance or risk management professional, obviously looking at it through a different lens. I'm going to start very simply with the easiest and simplest lesson, and it is you have to be actively managing your insurance and risk management program. And I say this because it's very clear from looking at the story here that the Condo Association board, the property management company, they were, from all accounts, asleep at the wheel when it comes to the insurance program. We don't know for sure exactly what happened with the program, but we do know that there's a very big gap in coverage from statements that have been made, and you can bet there's going to be a lot of lawsuits handed out to the board, to any management company involved, and almost certainly to the insurance representation for this condo association. It is a lot bigger of a property than most people are dealing with. It's 40-year-old building, 13 stories, roughly 135 units. If we look at some very specific estimates for building value in that part of the country and the age of the building, we're looking at somewhere between $45 and $50 million in property value, probably somewhere around there. That kind of property definitely warrants active and regular management. And whatever it is that you're managing, whatever your portfolio looks like, whatever your client looks like, for you agents and brokers out there, active management of your program over time is very important because things change. Specifically with regard to point two, we're going to talk about here in just a second, I don't know if there is an area of the country that is more volatile, more dynamic as it pertains to city ordinance, building codes, building standards than Southeast Florida. I don't know if there's anywhere in the country that has more changes on a regular basis. So if you're in Southeast Florida and you're not regularly reviewing no less than once per year your insurance and risk management program, you're probably going to find yourself in a pickle, as these folks certainly have. So actively manage your program. For you agents and brokers out there, you've got to be looking at city ordinance, building codes at least once a year, taking a close look at, hey, has anything changed in the municipality? Is there something that I need to be aware of that might be changing in the regulatory environment or the expectations of this jurisdiction has for our client, for our property owners? The second, and this is specific to insurance coverage, so don't tune out here. This is really important because this coverage that we're about to talk about is skipped or just overlooked or undervalued by just about everybody out there in the insurance buying community. But dangerously, it's also undervalued and not talked about nearly enough by most agents and brokers, and that is ordinance or law coverage. Ordinance or law coverage is a sneaky little value proposition, because if you've got an older property, or you've got a higher value property, or you're in a part of the country that has a lot of volatility with building codes and city ordinances, in my opinion, ordinance or law coverage is just about mandatory, because you have standard building coverage, what's commonly referred to as coverage A on a property policy. That protects your building, your property, for all of those weather-related or physical hazards that we're all familiar with, the basic stuff, fire, catastrophic water damage, a tornado, wind-driven rain. There's any number of things that are covered by the building coverage on the property. What is not covered is ordinance or law. There's 3 specific areas that are covered in ordinance or law coverage. They are known as coverage Part A, Part B, and Part C. We're going to dig into those 3 very quickly at a high level here. If you have any questions about any of this, our contact information is down below, and I'll throw it up on the screen here at the end of the video. Coverage A is protecting the property owner for any repair or replacement that has to happen to the undamaged portion of the building. Specifically for the Miami condo situation, the damaged portion of the building is only about 30-35%. We don't know exactly how many units were involved. I'm looking at a picture right here. That's roughly 30% of the building was collapsed. And there's a lot of speculation as to exactly what caused it. It looks like there's a lot of deferred maintenance, a lot of challenges in the mismanagement, the neglect from the board, from the HOA. Whomever was the agent or broker for the insurance program certainly has some neglect as well, it would seem. But the coverage A part of ordinance or law is protecting you from having to repair or replace the undamaged portion of the building. I'm looking here. I had a conversation with my friend and colleague, Ed Cooper. He owns an agency over in Maryland, Performance Insurance Group. Shout out to you, Ed. I'm glad we had a great dialogue on this topic. And Ed and I were kicking some numbers around here, and I agree with his estimate. We're probably looking somewhere between $45 and $50 million in property value. If we assume a pretty average value per unit, about $350,000 for that age of the property in that part of Miami, it's probably somewhere around there. These are all rough estimates, obviously. So if we're looking at the damaged portion of the building collapsing, leaving the undamaged portion of the building, which is not subject to standard building coverage because it's not damaged, we're looking at well over $30 million worth of coverage for the undamaged portion of the building. Coverage need, I should say. So if you don't have the appropriate ordinance or law coverage on a building like this, my gosh, I mean, you want to talk about lawsuits? It's a big fat lawsuit, folks, because the building coverage does not apply because it's undamaged portion of the building. So if you don't have $30 million or up to 100% of coverage A for ordinance or law, you've got a massive multi-million dollar gap in your coverage. Coverage A is absolutely essential in my opinion. Coverage B is typically written as a fixed dollar amount, not a percentage of the building coverage. Typically, it's 25, 50, 100,000. Coverage B is protecting the property owner from demolition cost. So if you have to bring in a third party to come and demo the undamaged portion of the building, anything that's subject to ordinance or law coverage, you're going to have to pay out of pocket for that. You're going to want to make sure that you have coverage for demolition costs because those are not going to be picked up by the policy. And the third is coverage C, again, also typically written as a fixed dollar amount, not a percentage of the building coverage. And that is the increased cost of construction. If there are delays, if there are other things that come into play, materials cost, or you have to get an outside contract, you have to get a structural engineer, there's any number of things that could cause an increase to the cost of repair or rebuilding. If it has anything to do with building codes or city ordinance, those additional costs are not going to be picked up by the standard policy. So you're going to have to make sure that your policy is correctly written for the actual exposures that you are facing. Now, a lot of the people listening to this, most of them don't own a $45 to $50 million property, but the same truths apply at a smaller scale. If you only own 1, 2, 3, 5, 10 single-family residences, for instance, let's say they were built in the 70s, the 80s, the 90s. It's kind of hard to believe, but the 90s were more than 20 years ago now. The likelihood is very strong that city ordinances or building codes have changed since your property was constructed. So ordinance or law, in my professional opinion, is very important. And we offer this on every single investment property policy that we sell. So if you want to have a conversation about ordinance or law coverage or reviewing your insurance program, you can hit us up right here. This information, info@riskwell.com. You can call our office at 469-678-8001. We'd love to have a conversation with you about getting better protected, because it's very likely that your agent, your broker, has not talked about ordinance or law coverage with you. So let's learn from the mistakes of those people in Miami with the condo collapse. Let's try to avoid the catastrophe, the absolute tragedy that has befallen them. Deferred maintenance is a different conversation. Active management of your property is a different conversation. But let me tell you, if you're not having ordinance or law coverage and you're not regularly reviewing your insurance program, you just might end up like these poor folks in Miami. So make it a great day, boys and girls. We will talk to you soon, and thanks so much for watching. Take care.